Let's delve into the first stock of the evening. Famous Brands turnover grew by 10% in the 3 months to the end of December. During the period, the company opened 18 new restaurants across Africa, with strong growth coming from Mauritius, Zambia and Nigeria. Chris, let's kick off with you. It's been one of those stocks that have been doing quite well. We know on the acquisition path for quite some time, opening up 18 new stores, but is 10% growth in the 3 months to December good enough for you?
Look, it's not bad, particularly when you look at the kind of base that we're talking about here. I mean, you've alluded to the fact that they've opened up so many stores. If you go back to about 2003, 2004, when in fact this major acquisition drive really started, when they bought things like Wimpy and Whistle Stop and stuff like that, they've hardly ever stopped since then. And that's the best part of a decade of buying more and more and more. You know, this has been a very, very clever approach, because it's broadened their appeal from being something that was effectively just burgers and pizza a decade or so ago, to something which now covers the entire market, and including chicken these days. But the downside to all of that is it's now become so big that to get the kind of growth that we're talking about will take a bit of time. There are certain other aspects to it, very innovative aspects, things like taking pubs into the townships, this type of thing. I think that'll propel it into a new growth path, but again, that'll take a bit of time.
And for you, I mean, we mentioned 18 new stores open across the African continent, ex-South Africa, 60 restaurants opened up over the period in South Africa.
A lot of growth there in 15 African countries. They've recently also just wanted to go into the UK as well. They're looking to open Steers franchise in the UK. That's on hold at the moment because of struggling economy. But massive brands, very famous brands. The brands are very famous, so they're very well known in the country. The likes of Wimpy, for example. I was actually chatting to a colleague of mine, and every time you go into a Wimpy store, for example, I mean, they're packed every time. Every store at all times of the day. So huge growth coming through consistently, slightly stretched, I think, though.
It's slightly stretched. I mean, as Chris was alluding to, getting slightly too big. Do you think that they are going to become so big that it'll be difficult to manage growth, or do you think it's going to help them diversify the risks that we could actually see in the economy going forward?
I think the acquisitions have been very good, and their brands are very, very consistent and well-known brands. They've had quite a big run in the last couple of years. 2011, last year, they were actually very, very sideways, in a technical sideways pattern between 40 and 46 Rand. And I'd like to see break above that 46 Rand, above that resistance, to actually get bullish again. It's consolidated around these levels between 40 and 45 Rand. So a move high would be very bullish. I think the brands will take it there. As I said, great brands, very well known, and consistently good revenues coming through.
And Chris, I mean, we're looking at operating margins starting to come under slight pressure. At least we don't have any indication with regards to this trading update, but previous numbers sitting at around 18% from closer to 20%. Do you think that it's going to be a natural progression to the downside on the operating margin front? Do you think they can maintain these double digits?
Look, it's going to be more and more difficult. You're actually quite right. Bear in mind that this company derives its profits, or its margin, if you like, from two sources. One, from the manufacturing of product, which it sells into its outlets, and secondly, from the actual franchise fee itself. And the trick here is to try and balance that profit margin by increasing one or decreasing one at any one point in time. And I think the geographical diversification gives them the ability to actually play with that margin over time. But right at this point in time, I think it is going to be difficult to maintain those kind of margins, because they are, as you say, quite a bit within the high side.
Well, they're coming very clever with regards to operational issues as well, and with regards to ensuring that they're opening up new restaurants in Africa. One interesting question is, obviously, when you look at the capex spend required to open up stores in Nigeria and Mauritius, and to ensure that you have the same quality that is offered to the consumers out there, do you think they're getting it right? It's reflected in the growth numbers, Dan.
Yeah, there are certainly challenges. Input costs, the prices of red meat have really skyrocketed, as we all know. And also one has to look at prices in terms of feed costs for meat as well. So they have to try and regulate that and try and get that right, so that they can continue to have good margins. Having a look at the company that we'll be discussing just now, Taste Holdings as well, also in the same space as Famous Brands, like-on-like sales for Famous Brands was actually up 6.8% for the same period for the previous year, whereas Taste Holdings was only only up 5.4% for the same for like sales. So, and they're getting it right in many different ways. And I think that going forward, it looks good if they do happen to open more stores around Africa.
But what
and
about
do happen to get
competition, though?
into
I mean,
the
in the
UK.
South African space, I mean, obviously they're focusing quite predominantly on the rest of Africa, but competitive environment is starting to heat up. 5.4% and 6.8%. I mean, it's not that much of a difference.
It actually is. I think it is a small difference, but they've got such a diversified group of brands, going from Tashes, which is a high-end, earner, to a very low-earning income earner. They've just acquired now also Black Steer, which is a Shisinyama. They say it's burn the meat, and that's they're going into the Vors and pup sector. So, they got the likes of Tashes and then catering to the really LSM market 3 to 6, so a lot lower. So they're very competitive in the space, whereas the stock we'll be discussing just now, like Taste Holdings, they don't have that many brands. So I think they should be okay in that sector.
And as I mentioned, pizza is very competitive, but obviously, as Daniel alluded to, the fact that they're operating in so many spaces that they obviously can ensure that they diversify risk.
No, that's right. So that what you win on the roundabouts, you sometimes lose on the swings, and vice versa. But as you say, they've covered pretty much every base. The only one that was missing until relatively recently was chicken. And they tried it a few years ago with Churches. It didn't work because most of the flavour went up the chimney. But now they've got Giramundo, which is a kind of, and I don't mean this in any derogatory way, a kind of down-market Nando's. And I think over time that will really come to the fore. It's small, but I think it can grow rapidly from this small base.
With regards to what we could be seeing from the further diversification, do you think the acquisition path is now over? I mean, they've gone into the pub space, the chicken space. We know that they've literally spread their tentacles across the board.
Yeah, I think for the time being, they'll probably want to consolidate at these levels. Give them a chance to bed a lot of these things down. Having said that, there is scope, I think, to grow perhaps in the rest of Africa. Although having said that, it's hard to see what kind of organised competition there actually is up there in terms of doing an acquisition or such. I don't think they do much more in terms of acquisitions outside of that. So I think it's probably likely we'll see a consolidation at this point in time.
Okay, and Daniel, as Chris mentioned, bedding a lot of these operations down. Some of the numbers really haven't filtered through, and just taking a look at the sales update, it seems that it's the normal brands that have done really well, such as Wimpy and Debonairs and Mug and Bean and Steers. I mean, when are we going to start seeing, a Giramundo coming through where we'll see quite a bit of growth? Is that even significant for an investor out there? Because it's still a small part of the business.
I agree with Chris with the Giramundo franchise. I don't think that's their primary focus now. I think they're more focused on their strong brands like the Mug and Bean, like the Debonairs. They were voted best pizza, best burger, best chips, best coffee shop brands as well. So I think going forward, having with the competition that they do have, I think they'll strive to be the best, and will place themselves in certain stores or certain malls that they get most feet. If you have a look now, Mug and Bean has just gone into all the total garages as well. So they really are expanding their footprint quite aggressively and being very innovative in like Woolies was going into engine petrol stations. Now they're going to be getting extra revenues from the likes of Mug and Bean at total garages. And
also exciting, a total new look for Milky Lane as well.
Yes.
So that's also coming through. Hot or not for you? Famous brands.
It's had a fairly big run. It keeps, like I said earlier with technical analysis, it keeps on hitting its head at 46 Rand numerous times. If it breaks above, I'll be very, very bullish. It's trading at a PE of 18, probably slightly expensive. If it happens to pull back, I think the whole market, including Famous Brands, is a buy the pullback sort of market. So I'm hot on the stock. I like what they're doing going forward. It looks great. They've got good brands, famous brands. So I do like it, but at these levels, I would probably wait for a pullback, or if it happens to break this resistance, I'd be pretty bullish.
Chris, hot or not?
From an immediate perspective, I agree with Dan. It's not cheap. It's above the market. But having said that, in the longer term, and particularly, we didn't really touch on it too much, the ability to go into the townships and bring taverns and pubs into the townships, I think that will really propel them to a new growth path. For that, almost that alone, I think on top of that, I would say it's a hot stock.
Hot stock. And is it liquid enough for you? There have been complaints in the past with regards to liquidity.
Yeah, it's not
held
that easy.
tightly by the shareholders, of course.
Yeah, it is kind of tightly held. Yeah.
You can get in and out though. I mean, it is possible to pick up stock and sell stock at a price. So it's not very illiquid, but it's not the most liquid of stocks.
Right. So a stock that Daniel Krause has alluded to many times already. Taste Holdings. We touch on the stock now. It reached a record high of R2.50 on Friday on the news that it had finalized its agreement with Brimstone Investment. Brimstone said it would pay nearly R37 million to buy 12.4% of Taste Holdings, which would use the cash to partly fund its planned acquisition of fish and chip company for R66 million. Brimstone has subscribed for 24 million ordinary shares at a price of R1.54 per share, 36% lower than Friday's closing price of R2.39. So Chris, over to you. I mean, it's a stock that you'd probably debate, Famous Brands versus Taste. Do you think that is a fair comparison to make? I was speaking with Oliver Russell from Global Trade a little earlier, and he was saying that he much prefers Taste relative to Famous Brands.
Depends on the type of investor you are. It depends what your time horizon is. Look, it's a hugely enigmatic stock with a highly charismatic CEO. And they've confounded the skeptics in many ways. I mean, if you look at what happened with the acquisition of Natal Wholesale Jewelers, NWJ, a couple of years ago, a lot of people out there said, well, what on earth has this got to do with food franchising? And Carla Gonzaga said, yeah, well, you know, it's all franchising at the end of the day. And at this point in time, he's been proved right, and the skeptics have been proved wrong. Is it a fair comparison with Famous Brands? In terms of size, it doesn't even begin to compare. But that may be a good thing, you know, because it's starting from a relatively much smaller base than Famous Brands.
Do you see the same potential as what we've seen with Famous Brands?
You know, one of the problems I see here is if you look at Famous Brands, their ability to actually make new acquisitions, and we touched on that earlier, is it's not easy. So although Taste is significantly lower, smaller, should I say, and therefore it should have greater growth potential from a much lower base, finding those acquisitions is going to be as tough for them as it is for Famous Brands.
Would you agree with that, Daniel? I mean, and now fish and chip company in the stable.
Yeah, absolutely. Look, it's nice to diversify and add more brands to their stable. You know, like I said, they have a lot fewer brands, as Chris said as well. You can't compare them in size to Famous Brands. They don't even come close. Nice business. For me, I've got a little bit of an issue with the jewelry division versus the food space. And my concern is
because the operating margin actually in the food space is far higher than what we see in the jewelry space, interestingly enough.
And for me, I think there's a lot more concerns one would have to look at. It is just retailing, yes, but one also has to keep a close eye on commodity prices, on diamond prices, on the rand, on currencies going forward. So, you know, it becomes there's a lot more of a twist involved. Whereas Famous Brands, they're focused on their food sector, they're focused on the restaurants and acquiring food franchises, and Taste Holdings is now in the jewelry and food. You know,
isn't it just about the consumer at the end of the day?
It possibly is. I mean, look, as Chris said as well, you know, I think a lot of commentators have been proved wrong, and it clearly shows in the share price. The share price was 50 cents in 2010. And in the middle of the year, it actually slowly started to trend up, and it was 50 cents. It's up 5 or 6-fold in the last 2 years, a year and a half. At the beginning of this year, it was actually around R1.80, and it's now at R2.50. So I mean, it's had a huge run, and the fact that Brimstone's actually getting involved and taking a 24% stake, it's got to say something. They've got to be doing something right. So clearly, maybe I'm wrong with the jewelry and the food. Maybe it's working for them, and it'll continue to grow and work out for them.
With regards to the food operating margin versus the jewelry operating margin, jewelry still sitting around 14%, operating margin on food at 27%, and then the profit for food 42%, and jewelry was sitting at around 10% higher also over the last trading period and the reporting period. Those numbers are significantly different.
Yeah.
Chris, is it worth having jewelry in the stable?
Look, they obviously think it is, and bear in mind that jewelry here is split into two. You've got retail and wholesale. And it tends to be the kind of middle to lower end of the market. So we're not talking about the kind of high margins you'd see in a Cartier shop, for example. But having said that, there's probably more traffic, and they've talked about the ability in the future to put a lot of these stores into some of the bigger macro outlets and stuff like that. So I think, you know, you're talking about an innately lower margin than you would intuitively expect from a company in the jewelry business altogether. So I wouldn't get too concerned about the fact that the margin does appear to be lower. I come back to my concern is, and I think I share it with Dan here, is the fact that I can't see the symbiosis between food and
hold on, the share price is up over 200% for 2011. So what is attracting investors? Is it the jewelry, or is it a combination of both? If you both not really can't really see, and I've heard this before, the symbiotic relationship between the two. What is it that attracts them?
At the end of the day, I think the track record speaks for itself. I mean, they have produced the goods in very recent times, and it's difficult to argue with the kind of earnings growth that they've come out with. And they've put their necks in the block, and they've said, that they're going to double their earnings by 2014 from current levels. Now, if that's the case, then although the PE is very rarefied, then perhaps you can live with it.
But let's delve into the food space. Maxis, Scooters, St. Elmo's Pizza, and we know how fantastic, very well Debonair's Pizza with Famous Brands is actually doing. So looking at these companies, yes, they're pretty much entrenched in the South African environment, but it seems Famous Brands has a far upper hand if you just compare the brands.
Yeah, absolutely.
Is that the right assumption to make?
I would say so. I mean, they've definitely got an African footprint, whereas Taste is definitely more local, and Scooters Pizza seems to be one of their prized food stores. They've actually, the St. Elmo's, they've actually converted a lot of the St. Elmo's into Scooters Pizzas in the Gauteng area. They're still in the process of changing some of those into Scooters because they feel it does much better than St. Elmo's. It's much better known, and that Scooters Pizza has really been the big prize winner for them and the cash cow, I think, within the business. I think over time, it's difficult with the jewelry business and the food. Again, it's if they get it to work, but at such a high price, it's had such a big run.
Hot or not then, Dan?
For me, at the way it's been trading, no. I like the business. It's hot. The business is hot. At the current share price, it's not hot.
Not hot.
Not at the current share price.
We wait for a bit of a pullback.
I'll definitely look for a pullback.
Chris?
It's too expensive currently at these levels. And although the track record recently has been good, I think we need to see a little bit more evidence over the next 6 months to a year that they can sustain that kind of performance. Otherwise, I would tend to hold off.